What is happening, DeRosa Insiders community? My name is Matt Faircloth, and this is the DeRosa Insiders live stream program and podcast. As I said, our company is the DeRosa Group, and this is DeRosa Insiders for you guys to see the inside look at real estate investing so you guys can take your real estate investing businesses to the next level for yourself, whether that's a passive investing venture or an active investing venture, whatever it is. We're going live on our Facebook channel, on YouTube, and on all of our channels, even on LinkedIn, for you guys to learn more about real estate investing, for me and our guests to teach you all that there is to know about the real estate investing venture. You guys want to follow us? Go no further, DeRosaGroup.com. There it is. You want to learn from us? You can do that. You want to invest with us passively? We do accept passive investments. We'd love to have you guys join us, whether you're accredited. If you're not accredited, we might be able to help you as well, but you got to develop a relationship, have a conversation with us, and talk to us first, and we'll see what we can do to help you get to where you want to go, because it's what we're all about. Transforming lives through real estate, helping you guys get where you want to go in your real estate investing venture, while we help others, including our tenants that are our staff and our team, get where they want to go, right? That's what it's all about. So let's hop into today's program. First thing I want to talk to you guys about is a current event. And then I've also got a great guest. Our guest is one of our students who is making things happen, knocking heads, taking names down there in the Southeast. We're going to be bringing him on in a little bit to talk to you guys about everything he's experiencing there and where he's seeing the market going and some insider tips that he's got. But first, let's hop into our current event. Guys, there are new deliveries happening across the multifamily world. And when I say new delivery, I mean, properties coming online, things being built and put up for lease. That's what's called a new delivery. And that's I'm giving you guys insider talk here on DeRosa Insiders about where you're going to hear economists talk about new deliveries occurring in certain markets. New deliveries are significant in a few things, and they're also insignificant in things you should stay away from in other aspects. So let's break it down, okay? What a new delivery means is a new apartment building being built, right? Got it. Now, if you already own rentals in a market where there are new deliveries happening, that's maybe good because it'll attract new eyes, new marketing dollars by those people delivering new units. Maybe they're going to make some investments into PR, into why that market is wherever that's Houston, Texas, or Atlanta, or Austin, whatever it is, for Phoenix, for example. They're going to attract new eyes to that market, and maybe they're going to absorb rentals from new people moving to that market. That's all good. They keep the momentum going because, as they say, a rising tide raises all boats. In addition, if somebody's building a new multifamily in the top city that's taking deliveries right now, Dallas, Texas, if you invest in Dallas and there's a lot of new deliveries coming in Dallas, the theory is as long as supply and demand curves hold up, the lease absorption of those new units will pull up the rent on something that you own right down the street, because that new delivery, as long as supply and demand holds up, I'm going to underscore that for a minute because now we're going to talk, because we'll talk for a second about what if it doesn't. But if supply and demand holds up, that will pull up the active rents. The average rents in that market will rise because of new deliveries coming on, and it'll pull everything up, and you'll get to enjoy that if you're investing in a market where there's new deliveries happening and there's absorption to lease those units, right? Okay, so this list we have here for you guys to grab, and for you guys who are watching live, my man Nabiku, who is the ghost in the machine, the Jervis to my Iron Man, will post it right here for you guys to grab. And also, if you guys are watching this recording, we'll also post it in the video comments or in the video description. So stay tuned there. So you guys want to see this list. I'm not going to read off all 10 of them. I'll make you go get this article. Read off all 10 of these cities to see where this thing is happening. So that's a good, new deliveries are a good thing if there's absorption to take the units. What we're seeing in another market here that I'll give you a hint on, in Austin, Texas, as an example. Lots of new deliveries happening in Austin, Texas. But the problem is because there's so many deliveries that happen in Austin, Texas, so many apartment buildings and new units got built over the last 2 years in Austin, Texas, that there's not enough demand currently to absorb all those rentals. So what has happened is it has pulled down the rents in that market. Supply demand, right? Supplies, picture two act, like this, supply doing this, demand doing that. If I have myself a whiteboard, I draw it out for you. But at the end of the day, there's too much supply right now because there's too many deliveries happening in Austin, Texas. So what that's caused is a decline in rent by 8%. By the way, in Austin, the rents are down globally by 8% in the city of Austin because of so many apartment buildings being built. The good news is if you're an Austin landlord, it's not like Austin's going to fall off the map or anything's going to make it a not attractive place to live. It's just that a lot of people found out that that's where all the cool kids wanted to move, is Austin, Texas. And so builders started building a lot of things in Austin, Texas. And so it's going to take a little while to absorb all those deliveries we see coming on board in Austin. And eventually Austin rents will come back. Some may say good time to buy in Austin because the rents are down. And so people that are selling might be reflecting current rents versus where we see rents going long term, because jobs are continuing to grow. It's continuing to becoming a great place to live. As I understand, low to no income tax or low to no taxes across the board in Austin and in the state of Texas. So for all the reasons and for all the economy and infrastructure moving in, Austin's still going to be a great place to go long term, but short term, it's caused a dip because of all those deliveries coming in. Now, so that's what you guys want to be careful of, is to make sure that we're in all these cities here. I'm not going to read them all off to you because you guys want to do your own homework. In cities like this that are receiving a lot of deliveries, are these folks that are building apartment buildings having to discount the rents? If they are, that means that they're not meeting their absorption timelines and the units aren't getting leased in the time that they're getting built. And that means that there is too much supply, not enough demand. So if you're investing in one of these 10 markets, go grab the article. Maybe even have the courage to call one of these apartment buildings and pretend you want to live there, see if they're offering any move-in specials. If they're not, that means that there's plenty of demand for what they're building. And that is a good sign for demand. Right now, another reason to invest in markets that are not on this list is that things like this are way outside of your control. And it is a good sign that there is the theory that the market will absorb all these new build units. But it is also competition that you're going to be dealing with that are always going to be newer. That are always going to be fresher, are always going to be in great locations, and are always going to be with all kinds of cool amenities and everything like that. You maybe don't have it. If your apartment building or your rental you have is fairly new, you're not going to be as cool as these rentals for new deliveries because these are going to be brand new. People want to live in brand new. So that's something you're going to be competing with as well in markets that have lots of deliveries. So for other reasons, these are some factors, pro and con, in investing in markets that have lots of things being built. Check out this list right here. My man Nabiku has posted it here into the comments on all of our feeds. So go grab that list, research it, see if you guys are investing there, and decide if it's a market you want to invest in or a market you want to stay away from. That's what we got for today on today's current event, guys. Now, we're going to be bringing in a good friend of mine, one of our DeRosa Accelerator Program students, and somebody who I think is really on the move. You guys want to keep an eye on, and somebody who's going to be teaching us a lot about putting boots on the ground, investing in a certain market, growth in a certain market, and how to transition away from a day job and into real estate investing full time. Let us recommend my good friend Lionel Alleyne. Did I say that right?
It's just Alleyne. It's spelled real weird, but pronounced pretty easily.
I butcher it. I'm sorry.
Right.
Lionel Alleyne, good to see you, man. How are you today?
I'm doing well. Good to see you, Matt.
Good to see you too. Could you do like a 30-second intro for our audience to tell us a little bit about yourself, and then we'll hop in to chatting about all the things that I want to get into today with you.
Awesome, Matt. Yeah, so I'm Lionel Alleyne, originally born and raised in Brooklyn, New York. This is my second time now living here in the great state of Georgia. I did my undergrad here about 20 plus years ago. Back then, it was a little art school called Savannah College of Art and Design. It's now an international art university. Cool. Moved back to New York for a couple of years, then went out west, lived in the San Francisco Bay Area for nearly 20 years, where I first got my start in real estate. I've been a licensed real estate agent in California for 19 plus years. I've helped clients buy and sell over $50 million worth of real estate. I've also spent the last 16 years in a large healthcare org And I led a team that deployed software training to doctors, nurses, and clinicians when they onboarded. Electronic medical record was what I was in. But along the way, over the last 5 or 6 years, I've managed to build out small portfolio of doors across 4 states. I managed those as 9 short and midterm rentals. San Francisco Bay Area. I'm in the Detroit market. I'm in Orlando, Kissimmee area, and also in Palm Bay, Florida.
Very good, very good, very good. Now you're so that's all great. You've transitioned away from your like longer term employment positions to go full-time real estate investing, right?
I did.
Got it. Why? When did you do that, and why? What inspired it? What gave you the inspiration, so to speak, to do that?
I'm glad you asked. So back in 2019, I tell people my spidey senses went off. So I see you got all the Captain America gear there. Back. So I felt like something weird was happening in the economy, in just the general community, in social media. Everyone was having a good time. Everyone was making phone calls on stacks of money and little weird things like that. And I just felt like I had seen this cycle happen before, having been a real estate agent through the GFC, through the great financial crisis to 2008, 2009, which actually started really early in 2008 for me because I was a licensed real estate agent and a mortgage banker. I felt it early. I actually was out of employment at that time. My entire real estate firm went under at the time. And so I went into corporate America at that time just to sustain my family at the time, 4 small children and a wife studying for her PhD at the time at Cal Berkeley. And so I got into corporate America, made my way up through the ranks. But then after about 16 years, I felt like there was sort of a greater calling for me to not only share the information that I garnered over 20 years of working in real estate, building out my own real estate portfolio, but also I learned how to manage my own personal finances, how to run a family budget. And those were the skills that allowed me to exit from corporate America by having good financial management and planning. Those were also the same skills that allowed me to make my first real estate investments and then continue to roll them into investment after investment. And so I thought it was ideal for me to start my own real estate firm, Blue Owl Capital, and begin to share this information with others and create opportunities, just like I'm learning from you with the DeRosa group on how you can partner with others to invest in commercial real estate.
There you go. Thank you. So what are you seeing out there? So you hopped in the commercial real estate market. I mean, I can't tell you, it's a different market than I've seen in my career of investing in real estate. Being someone that's fully immersed and climbing the commercial real estate ladder, taking on bigger and bigger deals. What's been your experience so far? What are you seeing for someone who's looking to buy more deals and grow? What are you seeing right now?
Seeing 2 things. Some of the old adages are still true. Location, location, location. But when you're doing commercial real estate, you need to really look at the market behind that location of the real estate. So understanding more around due diligence, understanding how to read and predict demographic data, how to look at what's undergirding the economy of a particular market you're looking at. So the diversity of employment factors through different sectors. I understand real estate. I understand healthcare. So those are things that I gravitate towards. But then there's also some new factors, changing interest rates, the shorter terms with commercial real estate. And then, like I heard on one call, the Category 5 hurricane that's currently happening in commercial real estate. Understanding that there's certain assets and asset classes that are being sold at a discount for some of the same reasons that you gave in your intro pitch a little while ago. There are some markets that are getting new product, and that product is affecting the existing product. Mm-hmm. So there's a couple of things happening. Some of the old adages of buy right, try to cash flow from day one, pick a great location. Those are still sound, but there's some new factors with how politics and legislation can also impact the industry that we really need to be concerned about. And then, of course, there's the biggest one of them all, insurance. Insurance is sort of a new thing that's affecting us in a new way. So being an operator right now, you really have to have a lay of the land, understand where these pitfalls lie, and then still rely on sound principles like you teach at the DeRosa Group on how to identify a market, and then also how to build the relationships you need to operate in that market.
So you're in a market. Tell us about where you are, the market and that you've chosen to invest in, and why. And then I want to unpack a bit about what, because I happen to know, because you and I do some coaching together, and that I happen to know what you're seeing out there with regards to some specifics. I want to unpack that, but before we get there, tell me a bit about the market you've chosen to be the sandbox you want to invest in.
I'm glad you asked. So with the exit out of corporate America, and with that summary I gave about budgeting and forecasting, as a family decision, we decided to exit from California. So we had a list of about 6 different states across the East Coast and the Midwest. We're originally from the East Coast. Our entire family is on the Eastern Seaboard, so we wanted to be closer to friends and family. So we began to look at different states to exit from California to, and we landed on Georgia, specifically the Atlanta metro area. But as I began to look at that area, it was ideal for us with some of the requirements we had around the size of our home, working from home, and having the amenities at home that we all realized we needed after going through the pandemic. But then also wanting access to community, great public amenities, parks, and also the school system here in Georgia. So, and also a lower cost of living compared to what we were experiencing in California. So that's why we chose the Atlanta metro market. But then as I began to look at the business component of it and looking at secondary markets where I could get started, begin to put down roots, analyze deals that I could acquire at a lower initial investment, begin to do some capital and some management improvements and be able to run these deals more optimally. I focused on the Columbus Warner Robins market, which is the second largest metro area in the Atlanta area. It's supported by 2 large military installations. And then there's just a whole host of industries from automotive, healthcare, zipper manufacturers, school bus manufacturers. They're all here in that area.
I love it. Love it. Is Miss West still a hotbed, Danny? Great question, Danny. What we actually shot a webinar on the Midwest versus the Southeast. I didn't want to make Lionel upset because he's invested in the Sun Belt Southeast there. Depends on the market in the Midwest. Danny, we believe in it at DeRosa. We also believe in the market that Lionel's in because there's no one market that's successful. If you want to tell me where you are, everyone tells me Columbus area is booming. There you go. Columbus, Ohio. Yes, because they're building a chip plant there. There's an Intel is building a big chip facility in Columbus, Ohio. And you also got a couple of colleges there and everything like that. So yeah, sure. But you got to look at jobs. You can't just name a region, right? Because I could say, hey, Lionel, I'm going to go invest in Baton Rouge, Louisiana, because that's in the Sun Belt, right? Well, the Baton Rouge doesn't have the job growth that where you are. Where Columbia, Georgia does, right? And nor does it have the job growth that, let's say, Minneapolis, Minnesota does. Minneapolis is one of our target markets. It's the DeRosa has 3 projects going on right now. So Danny, it really depends on job growth in the market. Jobs drive rentals. Jobs drives housing. We are no longer in a pandemic market where moving someplace because it's cool or because it's fun or because you can surf there is a place that's going to create long-term prosperity. We're no longer in a Zoom economy. Most people need to go to physical work. And so you're going to be looking at markets where there is physical work being created, blue collar and white collar jobs. So where Lionel's at, Columbia, Georgia,
Yeah.
Columbus, Georgia also. Yeah. And make sure we're not talking about Columbus, Ohio. I think that's what he meant. Right. But Columbus, Georgia is a good market. Do people commute, Danny or Lionel, from Columbus to Atlanta, or too far?
It's actually too far. But what we're seeing in the Atlanta metro area as the influx of people just coming to the state. So not just people like me who came from California. The largest demographic last year actually came from the state just south of us, from Florida, because there was a large migration of people to Florida. But Florida just doesn't have the same employment factors to support that large population migration.
Great tourist market.
Right. So people started moving back north to Georgia with the industries. I'm glad you pointed that out. One of the things that also led me to Georgia was because of some of the restrictions and how long the state was shut down during the pandemic. They really, in a short time, got people back into offices and kept their industrial sectors really intact, which was something that I saw on the West Coast, which was not the same. We were shut down for much longer. And as you see with some of the numbers coming out of San Francisco and other Western cities, it's hard to get people back into the office now.
Yeah, no, absolutely. We have markets like Honolulu, Hawaii, Lionel, had a major incentive program for people that were able to negotiate with their employer to work Zoom to allow you to live in Honolulu. Well, if I live in Honolulu and my employer lets me work Zoom, I might not be on my desk Monday through Friday, 9 to 5. I might, like make like a bobblehead version of myself, Lionel, so I can like be here while I go surf, I guess. Right. But a lot of that has ended. And so now, and what it works for multifamily is not everybody's working for Zoom that lives in multifamily. It works on Zoom that lives in multifamily. People need to physically go to work. That's everyone that works in the service industry, those that work in a lot of the blue collar workforce areas, and that's the heart of America, is in a lot of those job sources that are out there and everything like that. So to think that employment can be detached from housing location is short-sighted. So employment is really what drives a lot of these things. Well, Danny, I'll get to your question in a second. You're pivoting me onto Airbnb. I want to get with you, and we'll go there, Danny. Just hang tight for a second. My fellow Trenton landlord, I'm a Trenton landlord as well. Trenton, New Jersey, my friend. But I want to keep going with Lionel for just a second here until we hop in Airbnb for you there, Danny. So Lionel, in the market that you're in there in the like Greater Atlanta and in Columbus, Georgia, right? You've seen all kinds of different things. You've seen, newer built A-class stuff by brokers, and you've also seen some off the market stuff. Give us some specific details and stuff that you've come across, and how you were able to dig so far into the market and become so entrenched that you're starting to see all full spectrum of deals coming up for you.
I would say visiting the market, becoming really familiar, allowing your face to be seen. And this really dovetails with our previous point. There is a lot you can do in real estate virtually. You can Google Earth and drop yourself on a pin and spin around and
walk around. Yeah.
You can do all that stuff. But who knows that you did that stuff? The agent selling the property, they didn't see you. They didn't see your pin drop in front of the property, right? So maintaining real estate is still very much a relationship business. So going and talking to local lenders, that's advice I've taken from yourself, Matt. Talking to local lenders, finding out if there's at-risk assets that they may have loans on. Talking to local brokers who are looking and doing business in that area. Looking at their deals, even if the deal doesn't pan out, underwrite the deal, send them some feedback about the deal, call them weekly. And then they're more in tuned and open to showing you some of their off-market deals. And that's happened for me recently. Just talking to the same broker, looked at some of the things he had online, toured it. One I was going to write an offer on, missed out on it. There were others that didn't fit in my buy box, but I still took the day, went out with him, toured all the sites. And then he matter of factly mentioned, hey, there's this other property that I have that's not on the market. You think you want to see it? Yeah. And that's the one I did write an offer on. And I'm pretty close to getting that into a purchase sale agreement now. So it's just being out there, building relationships, and then presenting with a really professional appearance, from the way you show up with branded clothing, or just being intact with your attire, having a website, having a professional email, having a broker packet that tells a little bit about you, your company, what your buy box is, what area, what types of property you're looking for, who's all a part of your team, what's the experience level that you have. And these are the things that make people more comfortable and allow them to open up and want to do business with you.
I want to unpack one huge thing. And that's one thing I've taught you, Lionel, in our program, and I really appreciate you listening so well, and it's working for you, is that you've got to create the space for the broker and the market and the selling world to take you seriously. And I think that you've taken that advice that I've given you seriously, right? And yeah, that's right. My man Santana, that's my man Waldis Santana, yet another Trenton landlord right there. About creating a broker package, meaning like a offering about why you're great. And this is like a one pager about what's amazing about you as a buyer. And as Lionel said, you can't have you running around with a Gmail address if you want to get taken seriously. It's great. I got a Gmail as well, but I've also got DeRosaGroup.com, so brokers can look at my website, see what I'm up to, and see my track record as a buyer, and that, so they can take me seriously. Because guess what? A broker, guys, is feeding their family off of the transactions just like you are, right? They need to do deals so that they can keep their boats running on time as well. They cannot afford to waste their time with someone who's going to waste their time, right? So don't be giving them that perception that you're not worth the time investment with them, because as much as you're investing your money or your investors' money in your time with them, they're investing their time that they could be spending with another buyer, with you. And you want to make sure that they're making a good investment that's likely going to turn into a transaction. And Lionel, you've done that. And that's how brokers are coming to you saying, hey, I get this deal didn't work. Let's look at another deal that you can do with me, because they'll get to make a commission. They get to keep their trains running on time, get to feed their families on helping you find an opportunity. And it's only because they've taken you seriously that they're willing to do those things for you.
This is true.
Yep. Okay. So talk to me further, Lionel, about some of the challenges you might have seen out there. If we want to hop into the risk characteristics that happen with older real estate, I had this on here about aluminum wiring, stab block panels, properties, deferred maintenance. It could be notes from our past insurance carrier. If you want to jump into older property, older vintage stuff, I'm happy to jump in with that with you as well. And then when I want to get into where you see things going, let's get Lionel to break out his crystal ball and start talking about 2025. Before we get there, what are some of the issues you've seen in some of these properties you've come across so far?
Yeah, so my market, I was actually running some property data a little earlier today. My market, the average build is 1962.
Oh, boy.
That's a particular vintage. But when you talk about a town that was essentially a World War II community, many people in America are familiar with Fort Benning. It has now reclassified as Fort Moore. Warner Robins, about 30 minutes away, has the Warner Robins Air Force Base, another large installation. So these are hubs for basic training. So if you enlist anywhere between the Midwest and the Eastern Seaboard, you're going to end up in Columbus, Georgia, for basic training. So it creates a very interesting community. I've been going and meeting many of the current landlords and owners and operators in the area. I've come to find out there's a small demographic of gentlemen that own maybe about 60% of the entire town. Yeah. They're all plus 70 and still operating, still running their own property management companies that only manage their own properties. So that's what's been an obstacle and also an opportunity. It is a tight-knit community. They sort of an old boys club to a sense. They've been owning and operating for decades in that area, but the opportunity is they've got to retire at some point. The transition will happen, right? What has been sort of a lot of nepotism between them with units will ultimately, as they age out, go into the open market. So it's a challenge to find older properties that are under managed and not rehabbed to, I would say even last decade's quality of finish, but that creates a value add opportunity. It creates an opportunity to get into a property with an average of $500 rent in a market that's closer to like $950, $1,000 rent. So there's a tremendous value add opportunity, but some of the challenges are, yes, there's disrepair, they're older properties, and it's sort of a clique that owns a lot of the properties in the town. And then also the property mix, because it's been sort of a military-based town, there are a ton of one bedrooms in the town. I've looked at quite a few properties that was 80, 90% one bedrooms, and I'm talking over 20 units. So it's a very interesting unit mix. There's some challenges there when you have only one bedrooms in your portfolio. But these are all things that could be overcome with various strategies, whether it's connecting adjoining units to make them two bedrooms, or it's, again, building relationships so you can get sort of the properties that the big fish don't want and build your stripes that way. And then you become more credible, increase your door count, increase your education as you go through the deals, and then get yourself in a better position when they do want to offload a larger part of their portfolio. So yeah, there's been some significant challenges, but there's been some tremendous opportunities in looking at this market.
I hear, and I'm slightly high-fiving myself for our education tactic in DeRosa in our accelerator program, in teaching our students to stay market focused. And I hear such a great opportunity for you in staying market focused in Columbus, Georgia, in that, you've gotten to know who the owners are. You've identified that a lot of the owners are starting to age out of the business, let's say it in a nice way, right? And you've proven yourself to them that you can close, you can buy, you can do deals. And it's creating a great opportunity for you over the next couple of years to really infiltrate a specific market, right? For those that are watching, guys, hear me closely. If you are out there surfing LoopNet and you hear or you listen to a lot of real estate podcasts, as a lot of us that are trying to grow in the business do, as I do as well, and you hear somebody on a podcast talking about, Austin, Texas. Oh man, I'm going to go buy in Austin, Texas, and I'm going to go do some research in Austin, Texas. And then you listen to another Bigger Pockets podcast or Best Ever Show, whatever it is. You hear somebody talking about, Orlando, Florida. Oh man, that's it. Orlando, Florida. I'm in. I'm going to go there, and I'm going to invest there, and I'm going to go call my friends that are there and write some posts about it. Does anybody know anybody in Orlando, Florida? I got to tell you, Lionel, I have friends that are on Facebook that I see doing stuff like this, that every week they're doing posts on Facebook saying, hey, anybody know anybody in Sacramento? And the next week, hey, I'm trying to find a broker in Provo, Utah. Does anybody know a broker in Provo, Utah? And then a week later, hey, I got an opportunity in Tucson and I need to run it by somebody. Does anybody know? And it's like, until you stay focused, you're going to be chasing shiny objects. And there are 1,000, literally, Lionel, 1,000 good markets across the United States. There's not one better than another. Columbus, Georgia is not better than Austin, Texas. What's better than Austin, Texas is focusing on any market for a long period of time and getting to know everyone. There are opportunities everywhere. You either believe that or you don't. But I believe there are opportunities abound everywhere, but you're not going to find them until you drill in, right? As much as if I change my mind every week, I'm not going to get to know that all the owners in Ocala, Florida, or whatever market that I choose. That's why my company is only focused on, like, literally, even at our size, 3 markets in the United States. That's it. I'm not going to do a deal in Topeka, Kansas. I don't care how good the deal is. Nope. Not going to do it. And Lionel, I really commend you for staying market focused. And I really tell you listeners to have the discipline to stay market focused as well. And that is where success is going to be. Eventually you can grow out. eventually Lionel will do a deal outside of Columbus, Georgia, and he'll grow and expand and whatnot, and he'll get sophistication on that he can go and take on maybe one other market, but not six other markets. We're not even shopping that big. So Lionel, am I saying it properly here? Because this is one of the initial things that I taught you is about staying market focused, and I'm seeing a lot of success for you happen because you're staying market focused. What's it been like for you in that journey?
I agree. I wasn't as market focused in the past, so I've seen both sides of that coin. So,
no, you got deals in Kissimmee, Michigan, and Kissimmee, and you got deals over here, over there, Kalamazoo, and all that. Right.
And it's very funny you should say that, because in 2021, I was knee deep in the YouTubers, and everyone was down on Detroit at that time. They're like, I would never want to own property in Detroit. And everyone was down in the dumps on Detroit. But Detroit was what I could afford at the time with the HELOC that I had and my budget plan for what I wanted to execute. So I went into Detroit. Yeah. But I did the same thing I'm doing now. I met the best people at Home Depot's. Like, I'll give you an insider. You want an insider tip?
Bring it.
Sherwin-Williams and Home Depot are the best places to start out when you're doing market research. That will tell you about what's happening in the city. If you just talk to a couple people, you can find out from people who own in that city. You can find out from contractors who are working in that city, and people will right off the cuff tell you, oh yeah, the crime's bad. People stole my tools off the last project. You're like, okay, this is not where I want to be, right? So you can get insider details by just visiting the market and just being a fly on the wall, going to the places where the operators are. And I learned
you got to go. If you go to Home Depot, you want to meet good contractors and good owners, go at 7 a.m. guys. Don't be going at 10 o'clock in the afternoon, 10 o'clock in the morning. You go at 10 o'clock in the morning, you're going to meet the deadbeats that are coming in there off a hangover that are going to stagger the way onto a job site. You go into Home Depot at 7 a.m., you're going to meet the hustlers, the guys that are out there trying to shake the trees, trying to make it happen. So get up early, go get yourself a box of Joe from Dunkin' Donuts, and offer guys a cup of coffee in exchange for 30 seconds of their knowledge about the market in the parking lot of Home Depot. Give them a donut and a coffee. Say, hey, let me bend your ear for 2 minutes about the market here. You will have every best friend around the block looking for a donut and looking for you to make them an expert for a little bit. So I firmly believe in you about going to those places and picking brains. Well, great idea.
Another thing that I did, it started out sort of happenstance. I have short-term rentals and mid-term rentals in my market. So in all these places, I would go out and shop for a ton of retail stuff, bed linens, furniture, all that. And I would get into conversations with people. And one of the tools now I've added to my sort of tool shed, that's where I can find out my rental information a lot of times, because I would always ask people, hey, where do you live? What part of town do you live? And you can get information about the more preferable parts of town where renters are wanting to live by asking some of the people in the retail establishments in that town, hey, what part of town do you live? Do you live near here? And people will share that information. And that's a way to find out about these sub-markets inside of a market. And that's something I had to learn as well, too. The first couple of deals I looked at, I was looking at it, like you said earlier, Matt, virtually. When I was looking at Columbus, there's an Army base, focused on the Army base. Then I found out after looking at 5 or 6 properties in that area, I don't want to own anything anywhere near that property. That wasn't the best part of town. But then again, talking to people, talking to agents, then I saw the north side of town, downtown, and other parts and sub parts of the market, which were more ideal and fit my buy box better. So yeah, immersing yourself in the market, not just virtually, but getting out, talking to people, real estate people. But real estate is really a people business. So just wherever you can go to, fast food establishments, retail places, wherever you think your potential clients are, meet them head on, talk to them, have a conversation, and find out a little bit about where do they want to be. And that's as the Wayne Gretzky quote is, right, going to where the puck is going to be, not where it is right now.
Mm-hmm. That's right. You got to go. You got to be able to predict. So tell me again, 2025, Lionel, as we wind down here, where you see things going. Where is the puck going? And from what you see in Columbus, Georgia, and your investment strategies, how are you going to be playing into where you think the world's going in 2025?
I'm going to try to buy as much commercial residential real estate as possible. I
Mhm.
am going to try to deploy as many of the creative strategies as I can. Seller financing,
Mhm.
continue to market myself and raise capital, meet new investors, and really try to find as many deals on and off the market as possible. I'm really bullish on Columbus. There's some huge companies there revitalizing the downtown area. There's new shops, restaurants. There's talk of a footbridge to cross over into Phoenix City, Alabama. They're really looking to make Muskogee County the second largest metro area outside of Atlanta. So that means there's going to be a lot of development. There's been two large Class A developments right on the waterfront that are almost fully leased up. So I'm coming in at a good time with my project, which is nearby the downtown area. So I'm excited on a larger real estate perspective. I don't really feel rates are going to drastically come down. I know investors standing on the sideline, holding their breath, waiting for it to happen. I just do not think the economic factors are there for that type of rate reduction that people are anticipating to occur. I think it would actually not help us, but actually harm us, because we would see some of the same inflationary factors represent themselves rather quickly with buyers overpaying in the market. So I think it's just going to be steady. Make sure you find a deal that pencils. We don't know what's going to happen with, again, that big elephant I talked about earlier, insurance.
Yeah.
Unfortunately, Georgia did experience a hurricane this year, so there will be some impact. There were some cities damaged, just like what happened in Florida and North Carolina. So I think nationally, we may all, that tide may rise all of our boats in a negative way from our underwriting. But I'm just going to be really conservative with how I underwrite these deals. And again, try to be as creative as possible on either the acquisition or the way the financing is structured to make the deal work.
Love it. Love it. Great. And Lionel, I love your bullishness. A lot of people are not seeing what I think that you see and what I see as well. In that, real estate's going to go up in value. It's certainly not going to go down. I think I believe we're getting out of the point of stagnancy that we've seen in real estate over the last couple of years. And I think real estate, maybe not going to skyrocket, but it's certainly going to go up a good bit over the next couple of years. So right now and over the next, say, 6 months is a really good time to buy. Because if rates get a little softer, maybe not go down to where they were before, they don't need to, then as incomes go up and as property conditions go up and everything like that, it's going to push the value of your property up. And so right now, I think it's a great time to buy. I think there's enough softness in the market and maybe a little bit of distress sprinkled around every here and again if you're market focused enough to find it. I think that right now is a great time to be buying. So I agree with you, Lionel. Buy as much as you can right now, guys. Lionel, I'm going to ask you to put you on the spot here, and Nabiku might know I was going to do this. I'm going to turn my camera off. I want you to give me a brief, we need your help. I want those listening here to hear you as well about what you've gotten out of the DeRosa Accelerator program. You've been one of our premier students. You're one of my favorite students because you listen when I tell you to go do something. You do this wacky thing called doing it. You do what your coach tells you to do, and it's no better flattery to a coach who's really putting a lot of time and effort into getting you to the next level to actually take the advice that you're given. And so I really commend you for that. So if you could take a minute and just tell the audience here why you signed up for Accelerator and what you're getting out of it so far, any aspects you like about the program. I'm going to turn my camera off just so people can see you direct and hear what you got to say. And when you're done, I'll hop in. Okay?
Okay, cool. So initially, I started my relationship with the DeRosa group through a Bigger Pockets bootcamp. And I got exposure to Matt and Justin directly. Not only was there pre-recorded asynchronous content to sort of consume, but they were available during office hours. And what I realized from the very beginning was transparency and their compassion, their sense of wanting to share their knowledge and help you elevate your game from wherever you are. So whether it's helping you look at a deal, giving you information on how to just build your network, build your brand. I would use the word mechanics. They teach you the actual mechanics of doing this work. And all of that is undergirded by a tremendous support system, not just Justin, Hervé, and Matt, the principals, but most of the DeRosa group, from Jacob to Jessica to Tara, and almost the entire DeRosa team. You get to meet them, you get to interact with them, you get to ask them questions about what they're doing, how do they approach certain obstacles, or how do they forecast the deals they're looking at, source them. They've been 100% transparent and, like I said, compassionate in a way where they really take you under their wing and educate you on a real hands-on level. And then the community of just the other cohorts, being able to be on a call, hear what someone's working on, see the checklist that the attorney gave them, and that may be a step or two ahead of where you are, but you can actually see what that looks like and begin to plan for that phase of your own deal. Ask each other questions. People are sharing information. It's just been tremendous for me. It's been definitely one of the key elements to me transitioning out of corporate America and being a successful operator in commercial residential real estate.
Thank you, brother. I really appreciate you, and I could not have said it any better. Would you like it if I did a quick? Do you want for your website a quick testimonial from me to put on your website?
That'd be awesome. Thank you.
Cool. And it's Lionel Alleyne with Blue. What am I saying for the name of your company?
Blue Isle Capital.
Blue what? Blue Isle. Okay, cool. All right. Hey guys, Matt Faircloth here, and I want to just tell you guys real quick why I strongly recommend that you consider investing with my good friend Lionel Alleyne with Blue Isle Capital. Lionel is a phenomenal human being, number one. He is very market focused on, and he's very just focused in general on what he wants and what he's going to create for his investors. He's very pragmatic, and once he finds an idea that is going to make profit for himself and for his investors, he latches onto it and makes it happen. That's the bottom line. Lionel makes things happen. And I strongly suggest that if you're considering a place to passively invest your money into your hard-earned money to learn and to put your dollars to work into something that's going to create great returns for you with someone who's going to be transparent, is going to teach you along the way, I strongly recommend you consider Lionel Alleyne with Blue Isle Capital. There you go, guys.
Thanks, man. I appreciate that.
And if you could please send Lionel that clip and send me the take the clip that he did down, and we can use it for our testimonials. Cool. All right, Lionel, I'm going to drop you back down to the green room while I wrap up the podcast today. Thank you for being with us. I really greatly appreciate your time as always and our friendship. Take care.
Yes, sir. We'll talk soon.
Yeah. Hey guys, great conversation with me and Lionel, and great conversation with you guys. Lots of good comments coming from the market today. Really appreciate you guys as well. If you guys want to learn more about our accelerator program, go to DeRosaGroup.com/education. DeRosaGroup.com/accelerator. DeRosaGroup.com/accelerator, where you guys can consider joining our accelerator. And there is just a low monthly fee. It's like a gym membership. Cancel whenever you want for me, exposure to me and the DeRosa team on a weekly basis. So please check that out if you guys want to consider us. All Lionel's information is there for Lionel and Blue Isle Capital. You guys can click his websites there in the comments section on this podcast as well. Thank you guys for watching. Please come see us next Tuesday for our live session and listen to this podcast weekly if you like what we do here at the DeRosa Group. And you can learn more about us at DeRosaGroup.com. Take care, guys.